will come back to help her dad. Today, we're diving into the world of annuities. Simply put, an annuity is a contract with an insurance company where you make a lump sum payment or a series of payments, and in return, you receive guaranteed income payments, typically in retirement. The main purpose of an annuity is to provide you with a reliable stream of income when you're no longer working. While annuities offer the security of guaranteed income, it's important to consider the potential downsides, such as limited flexibility and the associated costs. Annuities are fundamentally a contract you enter into with an insurance company. The core function of this contract is to convert either a single large payment or a series of smaller payments you make over time into a steady stream of income that you'll receive in the future. In this arrangement, there are two key parties involved. First, the annuitant, who is the person who will ultimately be receiving the regular payments from the annuity, and second, the insurance company, which is responsible for making those promised payments to the annuitant. There are several types of annuities to consider. First, we have fixed annuities, which offer a guaranteed interest rate and fixed payments. These are known for their low risk and predictable income, but keep in mind that the potential returns may be lower compared to other investments. Next up are variable annuities. Here, the value fluctuates based on the performance of an underlying investment portfolio. While this can mean the potential for higher returns, it also comes with a higher degree of risk, and the fees associated with variable annuities can be higher than those of fixed annuities. Indexed annuities are another option, with returns that are linked to a market index, such as the S&P 500. It's important to note that these often come with participation rates and caps, which can limit your potential gains, but they do offer some market upside along with downside protection. There are also immediate annuities, where income payments start shortly after you purchase the annuity, making them suitable for those who need immediate retirement income. And finally, we have deferred annuities, in which income payments begin at a future date, allowing for tax-deferred growth over time. Let's discuss how annuities actually work. The first phase is the accumulation phase, where money is deposited into the annuity. This can be done either through a single lump sum payment or through a series of payments made over time. A key benefit during this phase is the tax-deferred growth, meaning you don't pay taxes on the earnings until you actually make a withdrawal. Next, we move into the annuitization phase. This is when you begin receiving income payments according to the terms of your contract. There are various payment options to choose from, including lifetime payments, payments for a fixed period, or even a joint and survivor option that provides income for both you and your spouse. Finally, it's essential to understand the fees and charges associated with annuities. These can include surrender charges if you make early withdrawals, mortality and expense fees, administrative fees, and rider fees for any additional benefits you might add to your annuity contract. Here are some of the advantages that annuities can offer. Depending on the type of annuity you choose, you can secure a guaranteed income stream for the rest of your life, providing financial security. Additionally, annuities offer tax-deferred growth, meaning you won't pay taxes on the earnings until you withdraw them in retirement, potentially allowing your money to grow faster. Many annuities also include a death benefit, ensuring that your beneficiaries receive a payout if you pass away before using all the funds. Ultimately, annuities can offer peace of mind during retirement by providing a reliable source of income and financial protection. Here are some of the disadvantages you should consider when thinking about annuities. First, they can be quite complex and therefore difficult to fully understand, so it's important to do your research. Next, the fees associated with annuities can sometimes be rather high, eating into your overall returns. Another factor to consider is the lack of liquidity, as surrender charges may apply if you need to access your money before the term is up. It's also important to remember that annuities may offer the potential for lower returns compared to other investment options. Finally, there's the inflation risk, where the fixed payments from the annuity may lose their purchasing power over time as the cost of goods and services increases. W. Let's consider if an annuity is the right choice for you by really thinking about your individual needs. Start by asking yourself if you require a guaranteed income stream throughout your retirement, or if you are comfortable managing investments that fluctuate. Assess your tolerance for risk and whether you prefer the security of a fixed income or the potential for higher returns, albeit with more volatility. Finally, evaluate your other sources of retirement income, such as Social Security, pensions, or other investments, to determine if an annuity would complement or duplicate those existing resources. Other factors to consider are your age, your current health status, and your overall financial situation. Take an honest assessment of your retirement goals, and this will help you align your investments accordingly. It's important to also consider the alternatives to annuities, which include traditional investments like stocks, bonds, and mutual funds. Real estate can also provide income, as well as the stable monthly income from Social Security or pension plans may already provide sufficient income. For making any decisions, it's critical to perform thorough due diligence. Start by researching the various annuity products available and the different providers offering them. It's important to compare the fees associated with each annuity as well as the features they provide, such as riders or death benefits. Pay special attention to surrender charges, which are fees you'll incur if you withdraw money early from the annuity. Consulting with a qualified financial advisor is highly recommended to help you assess whether an annuity aligns with your overall financial goals and risk tolerance. Finally, always read the annuity's prospectus carefully. This document contains all the important details about the annuity's terms, conditions, and fees. Thanks for watching. See you next time on Helper Dad. In conclusion, annuities can indeed be a valuable tool for generating retirement income, but they are certainly not a one-size-fits-all solution. It's crucial to carefully weigh both the advantages and disadvantages before committing. To make an informed decision, seeking professional financial advice is highly recommended to determine if an annuity aligns with your specific individual needs and financial goals. And remember, never feel pressured into buying an annuity. Take your time to thoroughly consider your options before making such a significant financial commitment.